Hey there, everyone! Welcome back to our channel. If you're new here, I'm Your Name, and today we're diving into the exciting world of investing. We're going to explore a topic that's gaining a lot of attention lately, ETFs, or exchange-traded funds. If you've ever wondered what they are and how they work, you're in the right place. So, what exactly is an ETF, and why should you care? Whether you're a seasoned investor or just starting out, understanding ETFs can help you make smarter investment choices. Let's break it down. First things first, what is an ETF? An exchange-traded fund is basically a collection of assets, like stocks or bonds, that you can buy or sell on a stock exchange, just like individual stocks. Think of it like a basket filled with various investments, allowing you to diversify your portfolio with just one purchase. Let's say you want to invest in technology companies. Instead of buying shares in every single tech stock like Apple, Microsoft, and Google, you can invest in a tech-focused ETF. This ETF would include a variety of tech stocks, providing you with exposure to the entire sector without the hassle of managing multiple individual investments. Now, you might be wondering, how do ETFs differ from mutual funds? They may seem similar, but there are key differences. For starters, ETFs trade on an exchange throughout the day, meaning you can buy and sell them at any time, just like stocks. In contrast, mutual funds only trade once a day after the market closes. This gives ETFs more flexibility and often better pricing. Another significant difference is cost. ETFs typically have lower expense ratios than mutual funds, which means you pay less in management fees over time. For example, the average expense ratio for ETFs is around 0.37%, while mutual funds can average around 0.44% or higher for equity mutual funds and up to 1.01% for actively managed ones. This may not sound like much, but over the long term, those fees can add up, eating into your returns. Now, let's talk about how ETFs work in practice. When you invest in an ETF, you're essentially purchasing shares of that fund. These shares represent a proportionate ownership of the underlying assets. For instance, if you buy one share of a technology ETF, you own a small piece of every stock in that fund. One of the standout features of ETFs is diversification. By investing in an ETF, you're not putting all your eggs in one basket. This can reduce your risk, especially if one company in the fund performs poorly. For example, during a market downturn, while one tech company might struggle, others might thrive, balancing out your investment. So, how do you actually invest in an ETF? It's pretty straightforward. You'll need a brokerage account, which you can set up online. Once you have your account, you can search for the ETF you're interested in, let's say the SPDR S&P 500 ETF, which tracks the performance of the S&P 500 index. From there, you can place an order just like you would for a stock. Fractional shares are also available on some platforms. ETFs also come in various flavors. There are equity ETFs, bond ETFs, sector ETFs, and even international ETFs that let you invest in foreign markets. This variety allows you to tailor your investment strategy to your financial goals and risk tolerance. Some popular ETFs you might have heard of include the Vanguard Total Stock Market ETF, the iShares Russell 2000 ETF, and the Invesco QQQ, which tracks the Nasdaq 100 index. Each of these ETFs has unique characteristics, so it's essential to do your research before investing. To recap, ETFs are a flexible and cost-effective way to invest in a diversified portfolio of assets. They trade like stocks, typically have lower fees than mutual funds, and allow you to spread your risk across various investments. If you're looking to enhance your investment strategy, ETFs are definitely worth considering. Thanks for joining me today. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more educational content. And if you have any questions about ETFs or investing in general, drop them in the comments below. I'd love to hear from you. Until next time, happy investing!